All right, let's dive right in. Today, we're talking about how to navigate this completely new American economy. Because let's face it, the old rules for building wealth, they're broken, but a new playbook is definitely emerging.
I want you to just let that sink in for a second. Everything. The financial advice your parents probably gave you, the strategies that worked for literally decades, they've been completely blown up. Why? Well, we've had the fastest interest rate hikes in history, the birth of this new AI supercycle, and a housing market that just feels, well, impossible. So here's the real kicker. The goals themselves have changed. That classic 60-40 stock and bond portfolio, it's really struggling. And for so many of us, the dream of a starter home feels more like a story from a bygone era. This new world demands something different. It calls for a more resilient, what we call an anti-fragile portfolio, one that can actually do well in chaos, and a serious focus on financial flexibility over those old traditional milestones.
Okay, so first, let's really break down why the old playbook is totally obsolete. It's not that the advice was bad. It's that the entire economic game board has been flipped over. For decades, our economy felt like it was built on solid ground, right? Three main pillars: stable, predictable inflation, clear career ladders you could climb, and housing that was actually accessible. Well, as you can see here, those pillars are now cracking. We've got volatile inflation, AI completely reshaping our jobs, and a housing market that's all locked up. We're navigating a completely new terrain.
So that brings us to these new economic realities. There are really four key forces that are creating our new normal, and if you want to build a successful financial strategy, you absolutely have to understand them. First up, sticky 3% inflation. Now, governments were always aiming for 2%, but the reality is a higher level of inflation just seems to be, well, sticking around. So what does that mean for you? It means the cash just sitting in your savings account is losing its buying power faster, and the cost of pretty much everything, from groceries to gas, is staying stubbornly high.
Second, the job market. The conversation has moved way past just, is AI going to take my job? Now we're seeing what's called the AI output gap. This is this growing divide between careers that are getting supercharged by AI, leading to way higher output and bigger salaries, and those that are getting displaced or just aren't as valuable anymore. Your entire career strategy has to account for this gap.
Third is a number that, believe me, affects every single one of us: the U.S. federal debt. This absolutely colossal figure is a huge reason why we're living in what they call a higher for longer interest rate environment. For you, that translates directly to more expensive car loans, more expensive mortgages, and yeah, that painful credit card debt. And finally, the housing market. If you've ever been scrolling online wondering, where are all the houses for sale? This is why. It's a phenomenon called inventory lock-in. Think about it. Millions of homeowners are sitting on these amazing 3% mortgage rates. Why on earth would they sell and then go buy a new home at a 7% rate? The math just doesn't work. So they stay put, and that keeps housing inventory incredibly low and prices stubbornly, frustratingly high.
So, given all that, how in the world do you actually build wealth today? Well, the solution is a whole new framework. It's designed not just to survive this crazy era, but to actually thrive in it. And it's called the anti-fragile portfolio. And this slide just lays out the new approach perfectly. Your portfolio now needs to be built on three distinct pillars. First is growth. You get that by investing in the real backbones of the new economy, things like AI infrastructure and energy. Second, you need stability. That means holding high-yield cash so you have what they call dry powder, basically cash reserves ready to jump on new opportunities. And third, you need a hedge. Using assets like Bitcoin and gold can give you some protection against inflation and all this uncertainty.
Of course, this new reality also means your budget needs a complete overhaul. That classic 50-30-20 rule, 50% for needs, 30% for wants, 20% for savings, it needs a serious update. With the higher cost of housing and pretty much all the essentials, your needs category is probably going to be a lot bigger. And that forces you to be way more disciplined with your wants, so you can protect that crucial savings and investing slice of the pie.
And listen, while you're building all this up, you have to play some serious defense because the new economy has new traps. AI phishing scams are getting scarily sophisticated. We're talking deep fake audio that can drain your accounts. Lifestyle creep, where your spending just magically rises with your income, is more dangerous than ever. And you have to fight that tech FOMO cycle, that urge to jump on every hot new thing without a real strategy. Okay, we've talked about the why and the what. Now for the most important part,
the how. This is your action plan, the actual steps you can take the minute this explainer is over.
Success in this new economy isn't about being some kind of genius. It's about being disciplined when everyone else is distracted. So here are your 3 simple steps for this week. 1. Audit your high-interest debt. Know exactly what you owe on those credit cards. 2. Automate at least one contribution to a simple index fund. Set it and forget it. And 3, and this one is crucial for your sanity. Stop checking your portfolio every hour. Let your strategy do its work.
So, what's the big takeaway from all of this? The path to wealth, it looks really different now, but it is absolutely still there. The American dream isn't dead, it's just been reprogrammed. And now you have a much better idea of how to read the new code.